guys, give me a second. Okay, so yeah, for you guys who are there, I would like to welcome you and thank you for attending today's Wednesday's live webinar for account holders. Today is the 13th of July 2016. Okay, so any questions first? I'll just take some questions from you guys first. I mean, if you've got a particular trade that you're looking at or a particular pair that you're thinking of entering your trade, or a little bit of troubleshoot, either or, you know, questions regarding your trade directly, feel free to ask, and we shall open it to discussion. Okay, I'll just wait for about a minute or so, and if you got questions, just type it into the chat box and we shall then start. Okay. Any questions, guys? No questions at all? Shall I then just start on my end? Okay, let's see. Questions? Yes. All right. Zifo. Okay. Sorry. Rabla. Yes. USD JPY and Euro JPY, USD CAD. Okay. All right. We'll go through the majors and then we'll go to Euro JPY, USD CAD as well. Okay. Good. All right. Now, before anything else, I just want to share a little bit with USD JPY first because something that I've spotted. I think. On the daily chart, I just want to share for those I think you guys who are already on to the how do you call that, Telegram message. I've just sent that through Telegram, but I just want to share that again because this is probably quite an important thing that you want to notice here with the USD JPY. I'm looking at the USD JPY on a daily chart. A lot of traders are wondering what really is going on with USD JPY, you know, but this is what I have noticed, something like this. If you can actually see, you've got price have actually got onto the 9916 area and shot up, and coincidentally this low here that you see is actually the low, it's the 52-week low as well, which is a very significant level. Okay, so when I take that here and I look to my left, and I see that we had some concentration of price and things like that here, and it shot up here and made a sort of how do you call that, a accumulation or a sideway market here. Okay, so that sideway market, that sideway market shot up this way, okay, and then made a curve here. All right, so I'm looking at a possibility of some more along this area, some more sideways trend. Okay, because this is I mean, people call it an upside down cup, but I look at it as well as a cycle. Okay, so what could potentially happen is this could act as a cycle. One cycle ends and then another cycle begins, and there may be room to the upside. Okay, but what may actually happen is for the how do you call that, for the prices to break out of the range first, okay, at about 105. I think this one here is not correctly drawn, so I'll draw it again, the resistance area, okay, or a sort of vertical horizontal channel. So you know that that's an area where prices could concentrate or accumulate before it burst upwards. Now this is just an idea that I sort of spotted earlier about an hour ago, and I find that this is important for us to understand that this may be what's going on with the price movement for the USD versus JPY, because there's a bit of uncertainty as well, whether it's going up, going down. We've got fundamentals giving all sorts of manipulated data talking about USD, having good data or positive data and the economy. So there's a lot of I'm talking about manipulation as well, because the exact things that's going on sort of clashes with what the media is saying as well at the moment. We have lots of job cuts and all that going on actually in the States. So that does not tally with employment figure. NFP was positive, and then you've got a lot of other positive numbers, and stocks went up. A lot of things doesn't really match so much, but I want to explain a little bit about the USD JPY so that you get an overall picture, a potential or a probable picture of what may be going on. It's just an expectation or an opinion, but then we can, along the course of trading days, you can see it for yourself whether this is exactly what's going on or not. Okay, so let me just I'll put it to normal drawing tool. Give me a second. What I'll do is I'll erase all these horizontal red lines first and draw it fresh, so you'll get an idea of the rough, how do you call that, channel. I'll use this low here at 99. Let me just make that a little bit better. Give me a second. Alright, so it's 98, 90, yeah, okay, so 99.03 or so. That's roughly where the low was, and that coincidentally is at a 52-week low. Now the 52-week low is a very significant area. Okay, the 52-week low and 52-week high, you can always type that on Google, and this could potentially be another strategy or another tool to look at, the 52-week. okay, and this is where I've drawn that horizontal line there. Now as you can see, it looks like a sort of cup here. You see, that's like a cup thing. Okay, so what I'll do next is I will mark the high of the channel, horizontal channel here, the sideway move that's here. Okay, what I will do then is to look for a support, a resistance area, and I'll mark that resistance zone. Okay, let's just see where market has actually concentrated, perhaps at another level. I'll just, give me a second. I'm just gonna, all right, I think we'll just use this one here. So okay, all right, now this is an area of accumulation. Okay, all this area here. Okay, I could take the whole lot here, but let me look at good level for us. So let's just take that high here. Okay, what if we experiment first? Let's take that high there and mark that with the body and then the tail, and let's look at how does it play around there. Okay, let's see. Not too bad, but what if we move that slightly above here? You've got that resistance area there, perhaps this one here. I'm going to readjust that. Sorry, we'll take it like that. Okay, we'll just take it at 10531 area. Okay, it's based on the daily chart here, and I just want to draw that out for you guys. Maybe slightly different than the one I sent you guys Telegram, just about a couple of pips, I guess, difference. But that room there, as you can see, from 10485 or 10531 area right down to the 99. That may be a horizontal channel or an area where prices needs to break out first. Okay, then we get a because this is an end of a cycle. So a beginning of a cycle, usually you would see some more of this. Okay, because this is a cycle. A cycle moves like this. Okay, this is how a cycle usually moves. It's made up of a couple of processes in the market trend cycle, meaning you'll get accumulation. This is your sideway, okay, and then market will go up, and then it'll create distribution. Distribution is actually a sideway market that is more volatile. As you can see, it's more volatile here compared to here. Here you've got a very narrow sort of sideway market, okay, and then it'll come down. okay, and it'll come down and it'll create some more accumulation again. So you'll always have accumulation, accumulation. This is your upward market, okay, right? That's your sideways trend. Okay, this is quite a common sort of cycle in the market, but I looked at the daily chart and I find that I just spotted this like I mentioned about an hour ago, and I find that this is important for me to share with you guys because this is possibly what is going on. Okay, and we've got down here. So what will happen is it looks like a sort of parabolic like cycle that we learn in mathematics. Okay, we've got it like this. Okay, and then what will happen is once it ends, it will then begin all over again. Okay, and then come down again, and basically this is how it goes, like the wave cycle. Okay, so we are looking at this possibly happening now. So I'm forecasting a bit of an upward sort of move once it breaks out of this channel here. So this is where I see a potential break out upwards, okay? But when I zoom in, once I've zoomed in, I'll show you what I mean. I don't see it happening immediately, a burst up. What I'm looking at potentially, I mean based on the daily chart, is for prices, as you can see, it found resistance here, correct? And it's still got some room here for it to play about, okay? If at all you've got no very strong, I mean, if a very strong catalyst or factor does not exist in the near future for it to push price upwards, then what would most probably happen first is for prices, you see it has actually just found resistance there. It might just come down a little bit. How far down, we don't know. Maybe down to this point, maybe halfway through, but then make a sort of challenge here again. But once it manages to burst, then it will burst, okay, upwards or break out. But before that breakout, I see a potential of it doing a sort of sideway, play about this range and then break out a bit, come back down and then upwards. Okay, this is potentially what I feel may actually go on with what's going on with fundamental, with a lot of things that are being readjusted in the summer period as well, in the world of finance. Okay, so I see that a potential, but just to cut the long story short and make it simple for you guys, is that I do see a sort of potential upwards, okay, but I think it may take a bit of time and play around a range, okay, before it bursts or break out to the upside, okay. But there's another very interesting thing. What I've also noticed is that it sort of complies with a upside down cup and handle pattern, okay, and this is how it looks like. Give me a second. Right. Now this is how the cup and handle pattern looks like, okay? Just the cup part, an upside down cup. An upside down cup handle pattern would look something like this, but it would signal downward trend once the pattern completes. Okay, what I mean by that is, I'll just draw that out here. So we've got a cup, okay, like that, yeah? What potentially could happen is a sort of upward trend upwards first, like a channel, okay? So that would be that channel upwards for prices to go up, may go up at halfway of this cup. I mean, from this distance to this distance, okay? Halfway is about here, all right? So it's around there, okay? So it could go up around there, all right? And then this channel up would then make a sort of how do you call that, handle of this upside down cup. And once it does that and it goes halfway through more or less, then it would break downwards. And if it does break down, then it would break quite significantly down, similar to the length of the mouth of this cup, okay? This from the very top to the bottom. So that means this one here, the high price now, coincidentally again, is a 52-week high, and this one down here is a 52-week low. So if we take that high price and low price, and we find the number of pips, and we divide that into 2, which is about 50, the length would be 50%. This is where the uptrend might roughly end. Okay, and then it start to break out, and if it does break out, then it would break out, you know, more or less the same length as that high and that low. That length there would actually come here. Okay, so I'll just draw that out a bit. So what I'm trying to say is that if we've got the length from there right to this area here roughly, then if I take that, give me a second, I think I've got some question going on. Give me a second, guys. Oh. I'll erase all that drawing first. Okay, take that. So what I'm trying to say is halfway through, oh, I don't know why that's not moving. Okay, let's just change. Okay, now it should. All right. Oh, don't know why that's something wrong with that. Let's just do it again. It's a bit of an issue with my mouse, I think. So I'll draw that again. Let's see. I'll be with you guys on the question. All right, there you go. So once it breaks out in the middle of the way, then we might see a potential to go as far down as, let's say, this area, just roughly. Okay, but we need the cup area, the handle of the cup to first happen. Okay, that means breakout of that 105.30 onwards, if there is a breakout, but I don't think it's going to happen that soon, meaning that there may be some room to go down first and then burst out. It does actually depend on equities, does depend on the equities market, the ETFs for gold, how they're playing around with gold as well, and then the Brexit situation as well, you know, politically more in the UK, because now it's more political than it's economical, because it's post-Brexit. After Brexit, what's going on now, suddenly you see that you got stocks and everything going up. Everything looks like it's all rosy again, but it's more likely a sort of a game that is played in the market as opposed to the real economics that is going on, or the real rosy picture may not be as real as it seems. Okay, because we just have got many conflicting numbers in statistics of economy and GDP and everything else. Okay, so it doesn't really match with what's going on in the media, all these positive numbers, with what is really going on with employment, with what do you call that, economic figures, economic indicators and things like that. Okay, so let's see, have I got questions or not? You guys have got questions? If not, this is basically we are talking about the USD JPY, a probable cup and handle pattern, an upside down cup and handle pattern, which eventually signals a downtrend after the uptrend. Okay, after the possible channel going up. Okay, go up first and create a sort of channel. Okay, and then it will break downwards. Okay, so for the upside trade, for those who are interested in the upside trade, we're looking at the breakout to happen first above 105.31. So if you're a conservative trader and you want to wait a bit more, then you can wait for prices to reach 105.30 and then go higher, maybe above 105.50, and above 50, like 60, let's say 105.60 to be an ideal selling area, buying area, and then you buy, and you could aim significantly at quite significantly, perhaps more than 100 or 200 over pips up on the upside. How do you do that? You can actually use your Fibonacci and look at, because it's about 50% of this length of the cup, you see. So if you pull this one here all the way down that way, roughly, okay? It might go to that level there at 112 area. Okay, so you got 1105, it may actually reach around there or close to that area there, but then you want to take your trades in stages. Okay, and because when the breakout does happen, we cannot really predict the exact time it would break downwards. Okay, so you would want to take it in stages and add that up with what you hear and feel in the fundamental side of things and sentiments of the markets and things like that. Okay, so let's look at questions. Teboho, your question is, if I look at the monthly chart, it shows a potential cup to the upside. How can we sentiment on this? You're looking on the monthly chart, you said? Okay, I'm looking at the daily, and we've got this going on at the moment, but the expectation here is for the upside to happen first, based on daily chart, right? So let's look at the monthly and see what's going on there. Give me a second. Okay, let's get rid of this Fibonacci. Okay, so we're still on USD JPY, but we're just shifting to the monthly chart at the moment. So yes, you are looking at that potential cup there and then a handle here, right? So that handle here has sort of completed, okay, which is quite nice. It sort of complies what I've just mentioned earlier on with the upside down pattern, because the upside down cup pattern is forecasting a potential upward trend. Now here, this is the mouth of the cup here, all right? You've got, I'll draw the cup first. Let me see whether we want to take this one here or up there. Okay, let's see. All right, let's say that's the cup, right? This is just, you know, based on visuals, okay? So we've got that cup there, and that's roughly the mouth of the cup. Now we've got a handle going on now here, okay? Now, it's not yet a complete handle, because what usually will have to happen is, oh, I need to erase that again, sorry. Okay, see, when you've got a cup like that, right? Okay, it's not very nice. Okay, all right, I'll just try, okay, draw a nicer cup as nice as I can. Okay, so we've got, let's say, a cup like that, okay. It would need to go down, all right, and make an upward move like this, okay. So it's due to go up anyway, all right. That is the mouth of the cup, okay. So that's the handle. That's how the handle from the sideway should look like. But what will happen is, I mean, we've got the mouth of the cup here, okay, mouth of the cup. So that handle, now that handle, the part of that handle, the downside has sort of come here at 9903 area, right? Which is coincidental again, right? And then it may be on its way up now. Okay, so we are expecting, based on the monthly as well, it is signaling a possibility upward move, which would then complete the second side of this handle. And if it does, what will then happen is for it to break out. If it does break out a little bit, usually what happens is once it breaks out, probably come back a little bit to the mouth area and then make that big push up. So that big push up is from the breakout point here. It's the same length roughly, okay, from the low price, as you can see, to the mouth of the cup here. You look at the number of pips within that inside of the cup, and you can then from this point here break out of the mouth to count that same number of pips as inside the cup for your take profit area potentially. But it's best for you to take the trades in stages, 80 to 100 pips per time, and then wait for it to correct itself, and then take it again, adjust that with psychological numbers and enter and things like that, and also be aware of the market's news and fundamental factors. You don't want to just leave your trade open for a few hundred over pips, because it's just too risky. You're on as it is a very risky financial market, which is Forex, the largest. On top of that, you've got the USD JPY, you've got fundamentals, and a lot of post-Brexit time, and then you've got elections. So you've just got too many along the way, and we just don't know what to expect as well, okay, with what's going on in the UK, what's going on in the States, elections, economic conditions. So it's just too much. So it's probably best for you to, yes, you can capture that image of what kind of pattern you're looking at, the possibility, the trend possibility, the number of pips expectation, but you want to then trade in stages. Okay, you don't want to just leave it and know that it will reach. No, we don't want to be in the know and be overly confident with things. We want to play as the market goes along. Okay. All right, so that's basically it. I hope that's clear to Teboho on what you've just asked earlier on. Okay, so it does sort of sink in with what we are expecting on the daily chart. Okay, because this is the monthly chart, as you have rightly mentioned. Yes, a probability of a cup handle pattern, and on the daily chart, we are looking at an upside down pattern, but the direction or the expectation of direction for each type of pattern, whether it's an upside down cup on the daily or the cup and handle on the monthly, it's signaling the sort of right signaling the convergence of direction. That means they are matching with the direction. Okay, because the daily chart, it is giving you the how do you call that, the potential of a upside down cup, but what is due at the moment is the handle up, and the handle, because it is an upside down cup, the handle has to go upward anyway, has to create an upward channel. So that upward channel does actually comply with what we have seen on the monthly chart for the handle that is down, because that handle is not that handle alone. You need to look at the handle as I have drawn earlier on. The shape has to be a down on the handle and then an up. Okay, then break out at the mouth of the cup. Okay. All right, let's see. Okay, Teboho, I hope that is clear. Yes, you can get a very simple, very easy to actually get the cup pattern handle. You can simply type that on Google. We'll do it just now so you can see bullish and bearish cups. Yes, of course, you could simply type. It's a lot because these cup and handle pattern, they were more commonly drawn or commonly traded in the stocks and futures and equities market. But now we've got more and more traders in the Forex market trading currencies as well as gold, like myself, trading gold and analyzing the gold market a lot since November or even October last year, based on the cup handle on a long-term or long-term trend. Okay, and it has gone very well, and it has, we are looking at quite a number of cup and handle patterns in the market for various instruments. So it's been working great, but we mix and match with other geometric and harmonic type patterns so that we get confirmation. Okay, which was what we did just about a couple of minutes ago with what we got questions earlier on, based on the questions earlier on the monthly, what pattern goes on the monthly, what pattern goes on the daily. We may even go and look at another pattern that is totally different, maybe not a cup and handle pattern, but a total different pattern in a 1 hour chart or in a shorter time frame chart. But then matching it up with the direction is more important than the type of pattern. Okay, if the direction of the pattern matches, then you've got a higher probability of that happening. Okay, so cup I type instruments, which is not right. Cup and handle, you just type like this. Okay, pattern, right? And once you do that on Google, simply go onto the images tab. You'll get loads and loads of sample. Okay, and you can visit the site that you feel you like the way they explain. But this is basically the upside down cup and handle that may be spotted or about to form to form the handle part in the daily chart for USD JPY. And this is how the inverse, we call it the inverse or upside down cup and handle pattern. So this is, you need the handle going upwards, it's a channel up, and then a break downwards. Okay, but the normal cup and handle pattern basically looks like this, which is a total opposite. So you've got the cup, then you got a handle, and the breakout is upwards. Okay, so that's basically it. We are looking at it, but to illustrate a little bit, this one gives you a little bit of illustration. Okay, so as you can see, the handle usually needs to go downwards, make a reversal up, and then break out. Okay, I think we have got, let's look for another image that gives you an idea, gives you an easy illustration so you can understand just by drawing. Okay, this one is better. Okay, here. This is quite a nice site. It's called finvids.com, and you can go on it, and you can get loads and loads of patterns in it. And you can actually look at prices. As you can see, you know, it needs to make that curve upwards, okay, for the handle to work. Okay, so it needs to come down and then go up and then break out, then it would make that handle. Okay, so let's see, do we have any clearer ones that gives you an idea? Because we do have quite a number of cup and handle pattern going on, and you might, you know, might want to spot it yourself and then ask and then share on Telegram, on the groups, on Orbex's group and all that, and that would be a nice idea. So here, as you can see, this gives you an idea. Yes, this is a better, more clear drawing of what goes on. So you've got a cup here, okay, this is your take profit area there. It's similar in number of pips here and number of pips here. Okay, so but then look at it, prices goes down first and then up, and that creates the handle, and then it returns back a little bit maybe, and then it makes that big move up. Okay, so that is a potential cup and handle pattern happening in both monthly as well as daily time frame. I'm not sure on the 1 hour, but perhaps other type of patterns on the 1 hour. Usually what happens is, from what I have noticed, is that you've got a cup and handle pattern, and that you see that move upwards to create that upward move, the right side of the cup. Okay, usually you've got prices making out or forming the flag and pole pattern inside that cup, and that is usually what happens. So you can easily spot either the flag and pole pattern inside the cup. So that's why I say you trade in stages. You trade in little patterns that are inside a very big pattern. So inside that big pattern, on the way upwards, let's say, for example, you may find flag and pole pattern, ABCD pattern, little M's, little W patterns, and all that, making out that pattern. So if we go back to our chart, and I go back to the daily chart, let's say, and I go into there, as you can see, it's an upside down pattern, correct? It's an upside down pattern here, an upside down cup and handle pattern here. But as we zoom in and look at the right side of the cup, we find there's lots of ABCDs, we find potential W-like pattern, we find, how do you call that, potential flag and pole pattern as well. So you see, like this one here is a flag and pole pattern here, okay? You've got the pole, you've got the flag, and then there you go, downwards again. All right, then here you've got a W-like pattern going on, and then it's signaling some more downward move. So inside a huge significant pattern, there are possibilities to to spot little patterns. So you can then move on to a smaller time frame and look for these patterns, but you know the direction and you know the bigger picture. The bigger picture is that big huge cup, but what's going on within that cup is the process in stages that you should actually follow in order for you to trade in stages. Okay, it would be a better move, a better strategy to do so. Okay, so more questions. Let's see. Okay, I'm not sure what you mean, Zifo. Your last question. Where can I get pattern based on time frame, as you said now? Um, Basically, I only concentrate on a few type of patterns. Okay, the ABCD pattern, the cup and handle, some harmonic M and W. But the thing is that it takes practice for you to spot them. Okay, so I have just spotted a possibility of that handle just about an hour ago on the monthly and daily, because I've been trading only in stages like ABCD pattern, smaller ones. But I thought it would be useful for you guys to look at it as a whole. Bigger pattern like the cup and handle pattern on a monthly or on the daily chart would be good for you to look at the possibility of how prices could play out following this pattern. Okay, all right, hope that's clear. Okay, Zifo, is that clear for you? I mean, from the Google that images that you have seen and I've showed you, I hope that's clear for the cup and handle pattern. Okay, now Teboho has got a question as well. The big downward move on USD JPY can confirm our up move since it's a falling wedge. Yeah, potentially yes, Teboho. That's a very good notice. So you see, you've got you guys may have been exposed to different types of pattern. Now there are differences between chart patterns and harmonic and geometric type patterns. Okay, the chart patterns would come like would come under the category of let's say how do you call that, double top, double bottoms, you know, like the wedges and everything else. Okay, and your harmonic pattern basically would be like the butterfly, the Gartley pattern, you know, the how do you call that, crab pattern, and all kind of patterns that come under the category of harmonic type patterns. Geometric is just something I've created myself. I tweaked it from harmonic and make it more shapes oriented, but I use a lot of one of the major tool I use is Fibonacci, and I have tweaked on the ratios that I use to convert from a harmonic type pattern into or to a geometric pattern for me to trade. Okay, Zifo, thank you very much for that. Okay, so it's clear. That's good. So yes, Teboho, that's a very good notice. You know, spot it well. If you got a falling wedge, you're familiar with other type of patterns, and then you mix it up with what I've shown you or what you're familiar with in the geometric side of things and harmonic. You can mix them all up together. So as long as they add on to your toolbox and confirm further the direction that you are taking to trade. That's all that matters, is the direction. And then on top of that, you look at experts from bank reports or reports that I share with you guys on banks, from banks, and you've got experts, other experts out there talking about it, and they all comply and talk about the same sort of direction of that particular trade. And on top of that, they've got quite similar levels to take profit. Then you are actually increasing your probability and lowering your risk, because you are measuring, okay, you are measuring the risk level as well, because you are doing analysis and research, and this is quite important. And this is what I call practical research and analysis, whereby you also measure certain things, you put in different ingredients into your trade, so that would then help you make better decisions, and not just by guessing or following only one source of things, you know. So that's a better way to trade. Okay, That's very good. Okay, so I hope that's clear for you guys on the USD JPY, because this is what's going on now. You are looking at USD JPY on the 15 minutes chart, and it's trading at 104.24 at the moment. As you can see, prices have actually penetrated or pierced through the 50 and the 100 exponential moving averages. It's looking like the bears or the sellers are in control at the moment based on the 15 minutes chart. We're looking at prices very close to the cycle level of 20 because it's 104.28. So if you want to look at the possibility of prices going down further, we would need to look at how prices are reacting to the 20 cycle number, meaning prices go under 104.20, go lower like 104.10 and lower, then you've got more dominance or control by the sellers. Okay, but this is the 15 minutes chart. We go on to the 5 minutes chart and we see that what's going on the 5 minute chart. We've got more bearish dominance and control by the sellers. Okay, and then we go on to the 1 hour chart. Again, we see more control, more fall of the USD JPY. But then when we went to the daily chart and the monthly, as I've mentioned earlier on the daily, especially on the upside down cup, I do see a bit of room to the downside. Okay, and perhaps later couple of days next week we might see more range sideways thing. Okay, if we do see that might comply with what's going on in the market. Maybe market coincidentally may be waiting for a sort of data release, or something's not certain by investors or something like that. So at least we have got a picture of that cup and handle pattern on both monthly as well as daily chart. Okay, but then we again want to zoom in onto shorter time frame and see whether or not it matches what we see in the big picture. Okay, so the big picture will give you an idea of what the big boys are doing. Okay, so you can then match that move that you see on the big picture with smaller patterns on the smaller time frame. Okay, I hope you get that idea. So like here, for example, we have seen on the daily chart earlier on, as I've mentioned, okay, some potential move to the downside first before the sideways move and before the uptrend channel move. Okay, so we've got three possibilities, three processes of prices. First, a little bit of down, and then some sideways, and then moving upwards to break out from that mouth area of the upside down cup on the daily chart, and then burst up. Okay, so we know that that may be a sort of progress, but we need to also listen to what's going on in the news on a daily basis, just to see that it complies with our flow of or plan of trade. Okay, so here let's say we're looking at potentially, now we know, okay, a bit of room downside. I go into the 1 hour chart and then I see, okay, there's also a potential of a ABCD type pattern going on here, okay, to the downside. So that is A to B there, and then I put that as C to D. So a potential of prices falling based on the ABCD type pattern to 103.80, let's say. Okay, but 103.80 is a let's say you want to take this trade and you want to trade as of now spot trading, and you want to enter sell, and you want to take profit based on that way we have marked it. It's probably best for us to then take profit above 103.80, because 0.80 is your cycle level. So 103.90, let's say, something like this. This is just an idea, an example. Okay, so that's a potential ABCD going on there. Of course, you can convert that into a geometric pattern, so you find that cross in between to look at ideal selling price and readjust that with the psychological number as well. Okay, so let's look at what's going on with questions. Teboho is saying, I saw the US debt chart. What will it do to USD and gold in the long term? Okay, it's a good question. I mean, just to summarize US debt, it never will go away. It's very difficult for the debt of the US to go away because they keep borrowing. The US government gets its money and keep on borrowing from the Federal Reserve. The Federal Reserve keeps on giving out, and it's got a kind of mechanism that needs to happen because that's the model of operation for the US economy, okay, and politics. All right, so the thing is, what's going to happen is we're looking at two things, okay? The U.S. Economy, or the U.S. Or America as a country needs to do two things for it to survive economically. Number one, it needs to always have inflation to happen, and number two, it must always prevent to the very best not to have deflation happen. Okay, they can encourage inflation, but they have to try to cut deflation as best as they can. Okay, so this is important. All right, so what does that mean? That means if inflation is going up, too much, they've got a level or an area of inflation like 2% to 3%. Let's say inflation is too high and they want to control inflation. They have to reduce the money supply. When they want to reduce the money supply, they have to increase the interest rate. Okay, so when they increase interest rate, what will happen is that when interest rate is high, people don't borrow as much. Okay, people don't spend as much. Okay, because people borrow and spend, that is how the economy goes more active, like an engine moving, and that is what they will want to happen if the economy is slow. If the economy is slow, they want to pump it up, then they will actually pump more money in. They will print more money. If they print more and more and more money, then what will happen? The interest rate will fall. Interest rate falls, then the value of the currency as well will fall, because when interest rate is low, more people borrow, more people loan and things like that. And this is the idea that the bank has to create money. Okay, when you see, we for example will have in our mind, the more debt we have, the more we borrow is bad for us, right? But how the banks and central banks think is very different. Okay, they create money in this debt economy. It's called the economy of debt. Okay, debt creating. Okay, it's a debt industry. So they create money by giving out loans and making people borrow more and spend more. So imagine people who are borrowing much more money from the bank and spend much more. It's good for the banks because they will see it as creating money. But then we, on the other end, will be more and more in debt. So you see, there are two goals that are going totally opposite. We as citizens of a country will want to reduce our debt, but our governments want us to be more in debt so that they can actually justify that the economy is doing much better, for the banks especially. Okay, so this is basically what is going on. So you need to know, Teboho, whether or not interest rate is going up or going down by knowing the economy. If the economy is really going down or going up, let's say the real economy, the economy has got two types nowadays, okay? One is the economy that is publicized and advertised to us on Bloomberg, CNBC, CNN, all these. This may not be 100% real of what exactly is going on in the economy, all right? Even what Yellen says and everything else may not actually be accurate because they need to play politics and mix politics and economy up together so that they think they won't panic us so much, okay? Or panic the investors from running out of the country and taking out all the investments. So they don't want the, they are more concerned about how investors are reacting to the news and to the decisions of monetary policy or fiscal policy and things like that. Okay, so what they will do is, so when we read or we get some real statistics. Sometimes you get the media putting in some statistics as well. Okay, so let's say a real economy, for example, will be very different. So the real, so what will usually happen is the media will give out, or Yellen or whoever will give out some of their version of the economy. But then the market cannot actually, the market works on real numbers and real economy. So that's what is reflected. So that is why you see a lot of conflict between what is said, okay, and then the market reacts to it, and then it reverses again, okay, because it just vomits out the thing that is not real. The market does it. So the market is actually all fair and all transparent, okay, in terms of how prices are moving with the economy and everything, because it works with the real things, the real deal, okay. But it is the governments and banks and policymakers and all that jumble everything up because they are using sort of the wrong model and economy to basically, it's mainly their benefit. Okay, so this is what's going on. So what we need to do is a real economy at the moment. The BOHO is not doing that good in the US. Okay, they are, they are encouraging inflation. You know how they encourage inflation? Because inflation is a good thing for them. They want inflation as well to happen. Okay, but then if it's too high, they control it a little bit. But they always want to push the gears. Put their feet onto the gear to ramp up the inflation. But as they ramp up the inflation, make inflation go up, what happens is that the value of the currency keeps falling down. So this is what's going on with the US at the moment and the US dollar. The value of the US, the real value of the US dollar has gone down by more than 70 or 80% already. Okay, so at some point it's very difficult to think that the US dollar value is good, so when that does happen, I mean, looking at patterns, looking at a lot of other resources as well, it does look like the value of dollar will go down furthermore. The US economy will then go further down. If that does happen, then you are looking at more appreciation of gold, because still it is a safe haven thing. But apart from safe havens, what is real is that there are differences between currencies and money. Money and currencies are two different things. Okay, gold and precious metal and everything, you can term that as money. Okay, the value is different. Paper money, the value is actually going down all the time, and if the paper money like the US dollar is not backed up by gold, then it's only currency, it's only paper money. It's got no value. Okay, but if one day the government decides and tell you that your currency, you can actually exchange that for gold with certain amount or a few grams of gold for how much money you have, that mainly means that the dollar or the currency you have is backed up by gold. If it's backed up by gold, then it's real money. It's money. Okay, if it's not backed up by gold, that means it's just paper that can be printed all the time, which is what the banks are doing now, and that is why they are actually making the interest rate really, really low, so that gold's value is actually higher, because they are themselves keeping gold, a lot of gold, in all the central banks. Okay, I hope that is clear. So in the long term, I mean, to cut it short, I see the potential of dollar keep on going down and the gold keep on going up. But we're talking about long term. So hence the reason I say trade in stages. So there may be a potential for you to, profit then, and not use too long a picture of the market, or too long a forecast, because we just don't know what may happen, because they are in control as well, and they can do a lot of things to re-manipulate the market and just do what they want to do to make it happen for themselves. Okay, so it's best if we combine the strategies, between what we see in the chart and what we hear and discuss among ourselves and trade it in stages. Okay, because this is what's going on with USD JPY, as you can see. Okay, there you go. It's playing around that level there. Okay, and it's still playing around that area between 103 to 105 area as well. Okay, and it's still under all the three lines, so we are looking at more, you know, downside sort of move. There's some space for the downward move here, so that's what I was looking at. Perhaps to wait until prices go under 103.70, then it's a good selling area. Then you can look at this short-term area here where prices have actually appreciated at that area to be a shortest term take profit area, and then a little bit down if the downward trend persists. Okay, so USD JPY, guys. That's basically it. And then let's look at what happened to oil. Now oil, that was the same pattern I've drawn since weeks and weeks ago. Played very well on the way down, but then we're looking at prices of oil. This is based on the daily chart to actually have a bit of a strong support. Now it got supported at that significant support resistant area, but mainly a support zone. As you can see, look left, you could see loads of concentration of support type zone there. Okay, and push prices up a little bit there, but then at a certain level it found a bit resistant downwards, but then that made up a W-like pattern. It's on the way down now, but again we've got a bit of support, so we're looking at potential price going upwards to that area where the first support reversal zone is at the 47.80, and then make further downwards. But again, as I've mentioned, you've got big patterns like this, but you've got smaller patterns like ABCD on the downside as well. Now as you can see, prices for oil have found resistance there right on the dot of the 50 moving average as well, so that gives us some reason to believe that it will, you know, try to come back down again. But we are looking at more cut of supply of oil, so be careful, because there may actually be a bit of a surprise to go upwards as opposed to downwards. Okay, so this is basically it. Now if we look at 1 hour chart, we could see that, you know, we've got potential flag-like pattern. There's some move upwards, but again, we would need to be very careful and know that prices needs to be above all three lines to give us a better stand of the market, as opposed to just trading in between three lines, like I've mentioned many times in the past, as well as every webinar as well, that if they are in between the three moving averages, it's just not right. Uncertainty prevails. Okay, so we would need that price to go above at least all three, at least one, but then all three would be ideal. Okay, for it to give us a bit of a clearer signal of direction that it wishes to take. Okay, now supply cut meaning it's not really supply cut. What is it really is production cut. Okay, they've come up with a sort of agreement in various countries. We've got Syria and a couple of other areas that have actually agreed a bit of a cut on oil glut. So that is driving prices to go on the upside. Okay, and this is what's going on at the moment with price appreciation and things like that. But we want to be careful with how we trade it. Does actually depend on what's going on in the States as well, and you want to type oil forecast, oil news, oil production onto Google and click on the news tab to find latest news revolves around agreement on cutting production. So it's more like production cut. It's more like they've come into agreement with several big players in the market, including Iran, Syria, Saudi, maybe Canada as well, and all that. But we've also got some issues in Canada where you've got the wildfires and all that in the past, and that has actually sort of dampened supply or dampened production of oil. So that means the supply of oil will be down. Okay, when you dampen or cut production, when the factory is not producing something, then the supply of that would be down, right? But then the demand will be higher. Let's say the demand keeps coming, but then something has actually happened in the production, in the drilling, in the extraction of oil, that basically means that the supply is suffering. Okay, so it's supply suffering, but then you've got increment in demand. That's how you get the what do you call that, upward move in price of oil. Okay, guys. All right, Teboho, is that clear? Okay. Now, Teboho has got a question earlier about what could be the reason for CAD to gain value even if oil is going down. Is it possible? It is possible. It is possible. You need to actually be careful about understanding the correlation between CAD and oil. Is the CAD or Canadian dollar correlated to the supply of oil or the price of oil? You need to be very careful. Is it the price of oil that is going up and up or down and down? Okay. Is it the production of oil? Is it or the supply of oil? Is it the supply of oil or the demand of oil? Okay, you need to understand that. It's more the price. Okay, so Canada, for example, let's look into. Now we've got USD CAD, right? We've got CAD appreciating with oil. Now we've got USD CAD, as you can see, you've got more on the downside for USD CAD. Will that be a correlation with that at the moment here? Not yet, it's not showing, but we go on to the 1 hour chart for the USD JPY earlier, not really that much related to the USD CAD move, okay, but that also means that there definitely is something going on with the CAD as well, okay, or perhaps some data release at the moment. But when we go on to oil, we look at it and we go on to the daily chart, we could see that it found a bit of resistance there and something is happening on the downside, okay. So it's supply basically. We got Canada on USD CAD, the Canadian dollar is on the upside, okay. Now oil prices is looking like it's coming downwards, okay, so it is actually negatively correlated to the price of oil, okay, but it is positively correlated to the demand of oil. So the demand of oil is on the upside, so the Canadian dollar is also on the upside. But you would need to go and look at the other Canadian thingy first, because I don't really like having a theory of correlation to be fixed in my mind, because it has changed over the weeks, over the months tremendously. Okay, because of what had gone on with Brexit and everything else. Lazy Z pattern says Teboho. Give me a second. Let's see. ABC pattern on 4 hour chart. Could it go Lazy Z pattern on D1? Can it confirm? Could you tell me specifically what pair are you looking at? I mean, is it USD CAD or is it oil? Okay. Michael talks about NZD-CAD hourly 4. Okay, yes. All right, I need to rush on this one, but let's quickly go USD-CAD first and then NZD-CAD. Okay, so USD-CAD, let's go on to that. USD-CAD, there we go. USD-CAD. Now here, very clearly, I mean, it looks to me a very nice ABCD type pattern here, okay, but before this pattern talk, we go on to looking at overall what's going on with the trend. Trend wise, you got a bit upwards, bounce downwards, making sort of a higher high on a big scale, but then lots of higher lows as well. So looking like it's got a sort of a step upwards, okay. There may be a potential there on an upward trend, but let's look at 4 hour chart. Now 4 hour, we've got it not it's challenging the three moving averages. As you can see, it's right on the dot of the 200 moving average as well. Okay, if it finds support there and upwards, that means you've got a bigger likelihood of prices still going up, and it may actually mean that these ones are actually corrections. Okay, but how do we do that? One of the ways that I do that is I like to trade patterns. As you know, you've got A, B, C, D downwards. This move up could be an M-like pattern, but what I'll do is I'll go on to the volume indicator to look at divergence. Okay, whether I see divergence between price. This is a candlesticks here, right, going upwards. Okay, now that upward trend happened from here to here. That's upward move. Okay, but when we look at the volume, we see downward volume. You see all these green sticks, red sticks, they are on the downside. One is lower than the other and is on the downside. So there I find a bit of divergence going on there. Okay, so because it's a divergence, I can then consider this leg as my M-like pattern. Okay, so M-like pattern is made up of that big XA leg and then the AB equals CD. So I take that AB equals CD. So I find myself looking at this level as a possibility of a USD going to this level here. Okay, roughly, right? That's your projected D area. Okay, that's just doing the AB equals CD in length. All right. Now, then we've got it looking like an M pattern. So an M pattern usually signals an upward move once it reaches the D area. Okay, but let's use Fibonacci a little bit to look at A. I pull it to B and I look at my C and it's actually close to that 61.8. Very good. So if it's 61.8, then I pull my B to C to look at the 1.618 level as my second potential of my D. Okay, so it marks a lower level, slightly lower level here. Okay, now also apart from that, I like pulling from X to C as well as another potential area. So that's my X to A, B down here, I pull to C as well. Okay, so once I pull it to C, I choose two areas. One is the 61.8, okay, as well as the 78.6, which is right in between here. Okay, right. All right, very good. So now I've got a zone. Okay, that higher area could be a potential area where price could then start to go up, and it's actually just right on the dot there. So I mark this area as my reversal zone, okay, of my M-like pattern. Okay, so basically, oh, I think I've got the wrong tool. Okay, there we go. So that's what it is here. Okay, that's the reversal zone. So as you can see, prices indeed, it's looking like it's reversing at that area, but then we want to wait a little bit. Look to the right onto the price itself. You see you've got price at 1.2967, 1.2969. okay, now 69 or 70 and all that, you go upwards, it's the 2980 area. I would like to know for sure prices are, you know, more onto the upside once it's above the psych level of 80. So 1.2980 and above by 10 pips will give me 1.2990. But then 1.2990 or 2990 is very close to the 13000 area. So we would like to look at 13010 area to be a potential signal to the upside for USD CAD. Okay, so this is the M-like pattern that you can see. Try looking into the shorter term and then match up with bigger patterns on the monthly or the weekly, and then you match it up like that, as what we have done on the USD JPY. Okay, so that's an M-like pattern there. All right, now we go on to NZD-CAD. I think that's what we've shared, right? Okay, you guys would like to know how accurate the bank was and the bank signals. It may be on the long term, so it may not actually happen just yet as of now, but we can always look at it from the trader's perspective and see what's going on with NZD-CAD. Okay, so NZD-CAD, let's look at that one now. NZD-CAD right here. Once we've done there, and then we get rid of the grids right there, and then we go into the NZD-CAD on the 1 hour chart. 1 hour chart, there we go. Now we did experience some move to the downside here on the 1 hour chart. As you can see, it is already happening. It was a bearish sort of move, correct? And that's what's going on. 9473 now. It was up at 95, or was it at 95 something? Yes. And now it's at 9473. So it's indeed doing that downward move already. It was a downward signal, right? So when we do that, let's see what's going on. There we go. What can we see here? I remember that I drew a sort of Z-like pattern as well on the daily chart. Okay, so that may be a sort of a Z-like pattern there. Okay, but if I pull that and look at 50 area, usually it ends, the C to D move would come to the Z to the 50 area like there, okay, or let's make that straight to the 50 area. So then I put that to the 50 area and I look at an area that is close. So let's say I pull it like that, okay, that is where the Z sort of lies, okay, and there we go, there we go. All right, so we've got a Z-like pattern potentially there to coincide or match with the signal that was provided today for NZD-CAD on a very long term. They say that it could go down to 8900 if I'm not mistaken. I think that is it. It's at 9474, but they say it could actually be around there, but we don't want to be greedy and just simply put our TP on the 8900. We just want to be careful with that, okay? Yes, we just keep that in mind because things can change, okay? We want to trade in stages. So based on patterns, I would like to trade in stages based on that Z-like pattern. So on the downside, that's what we're looking at, okay? Potentially, this is based on a daily chart, okay? Now, look at prices, 9470 already. That's a good indication of prices going under the 80. So we are selling, let's say, and we want to take it in stages, 180 to 100 pips per time, and then once it crosses, go under the next site number, and then we go again. Okay, so downwards here, downwards, coming downwards. Let's go onto the 4-hour chart. Let's say it's going downwards, okay, and let's look at downwards. Look left, look at potential support area as well, okay? Are there any significant support that has actually occurred in the past, okay? We can always pull that, okay, close to where we are. There's a lot of resistance, which is a good thing, okay? Loads of resistance, loads of resistance. Go past that, it's got more volume downwards, but we've got a bit of a resistant area here between this the body and the tail of that longish candle, okay, maybe a support area, and then that may be supported by more support area here as well, as you can see. So if the price gone under 9440 and under, it's even a better sign for it to just make that big move downwards, hopefully. Okay, so that's basically it for NZD-CAD. I mean, it's a bit too early stages, but as I have pointed out, we have got a bit of a, how you call that, target at 0.90, let's say, 90 or something. But let's take that in stages because it's a far long way down, and that's how bank trades, you see. So hundreds and thousands of pips. But we want to take that in stages, as I've mentioned. Okay, 9434 to 9424, but then we want to take it at 9430, let's say. So 9430 to 9330, that's 100 pips, let's say, and then we take that in stages, adjust that again, check numbers, and and do that. Okay, but under that line would be better because we've just found that to be a bit of support. We want to trade conservatively as well. We want more power from the bears to go under that 9434, go under even more, under 20 would be even better, and then we start trading. Okay, I hope that's clear, guys, because I've got to go in a minute or so. So if you guys have got any questions, do feel free to ask. If not, then you can always email me at kenny@allbacks.com. Okay, so any questions, I'll just linger a little bit for another 1 or 2 minutes more, and then we shall then speak again next week, or meet again next week virtually. Okay, any questions, guys? Anything at all? You guys are clear with your trades, especially? Michael, is that clear? You guys who have asked me questions as well, Taboho, Zifo, everything's clear? Okay, let's see. Yes, you send me slides, Taboho. Okay, yes, no problems. Good, Michael, thank you for that. Okay, good. Yes, usually yes. For the Z that I've just drawn now, when it ended at D, then yes, you're right. You've got the buying opportunity to take place as well. Yes, a Z pattern there basically tells you that once it ends around the D point, this area, that's upwards. Okay, and if this is C. Okay, this is D. You are trading your downward, you're selling here from C to D, correct? But then when it goes up to point E, okay? So you are then buying from D to E. So you got two legs, okay? So usually based on the Z pattern, it always play around there and then it goes up, okay? All right, brilliant. Okay, guys, I need to actually leave, so I will need to say a big thank you to you guys for attending today's live Wednesday's webinar. So I shall then see you again next week for the Monday live webinar. Okay, so have a very good evening. Happy pipping to all. Any questions, email me at kenny@allbacks.com. If not, see you next week. Take care. Have a very good evening, guys. Thank you very much. Bye-bye.